Ladies and gentlemen, dear media representatives, I'm truly pleased to welcome you to the press conference of Latvian Presidency informal ECOFIN meeting in Riga. Today was the first day of the informal ECOFIN meeting, and I would like to inform, and we would like to inform you about the issues that have been discussed. President of ECOFIN and Latvian Finance Minister Jānis Reirs, Vice President of the European Council Valdis Dombrovskis, and Vice President of European Central Bank Vítor Constâncio are taking part in the press conference today. First of all, I would like to give the floor to Mr. Reirs.
Thank you. Dear media representatives, I am truly delighted to welcome you all in the capital of the Presidency of the European Council, to welcome my colleagues, Ministers of Finance in Riga. We have successfully worked for half of our Presidency's mandate already, and I have received only positive feedback from my colleagues regarding our work. I'm confident that the second half of our Latvian Presidency will also be that of responsible work and work for the benefit of European citizens. We have come to an end of the first day of the informal ECOFIN meeting under the Latvian Presidency today. We discussed issues today pertaining to economic situation in the European Union and about the required growth-stimulating structural reforms. Disregarding the positive economic outlook in Europe, there are still problems such as low demand, decreased productivity, persistently high long-term unemployment. This all underscores the necessity for structural change to guarantee growth in the EU on the whole, to stimulate investment and employment. We will not be able to attain sustainable growth in the EU on the whole without implementation of carefully designed reforms at the national level. We may not postpone introduction of such reforms. They are required now, as we speak. It is also important that people and social partners support the implementation of such reforms. The process must be carefully analyzed. It must be based on actual facts and previous experience. We must work towards EU competitiveness in order not to lag behind other regions in the world, and also in order to maintain the existing quality of life in long term. I am confident that these structural reforms will guarantee the return of investment flow to Europe. And therefore, I would like to ask my colleagues, as they return home, to review their existing policies to avoid barriers for investment flow to EU. Speaking of investment, the investment plan for Europe is one of the main priorities for the Latvian presidency. The first trialogue with the on the European Strategic Investment Fund that took place yesterday was the first success of our working together. The Council and the European Parliament agreed on a common statement wherein they expressed their commitment to approve the regulation within the set deadline. In the course of today's discussion, the ministers came to the conclusion that it is paramount to work on the implementation of the investment plan as a whole, focusing on its third pillar in particular. It means that we should press on with our ambition to deepen the single market for goods and services, to complete the establishment of digital single market, to create the capital market union, and to pursue our objective to create the energy union. All the member states should keep up their degree of responsibility to ensure growth in the EU, to implement structural reforms, and to eliminate barriers for investment. On this, we are all united, and we may not delay the implementation of these reforms and these tasks. To conclude, I would like to inform you that the second session of the ECOFIN Council meeting is scheduled for tomorrow. We plan to discuss the Capital Markets Union and establishment of the Capital Markets Union, and also we will focus on our roadmap of measures aimed at the fight against tax avoidance, which is a threat for our tax revenues. Thank you, colleagues. Now I would like to pass the floor to Vice President of the European Commission, Mr. Valdis Dombrovskis. Valdis, over to you.
Honorable Mr. Minister, ladies and gentlemen. It's a great pleasure for me to address you here in my hometown, Riga. And first of all, I would like to thank Minister Reirs and Latvia's presidency for the flawless organization of these meetings. Today's discussion in ECOFIN focused on the state of economy in Europe. We discussed how to raise the growth potential in the EU, notably through the structural reforms and investment. Looking at Europe's economy today, one can breathe a little sigh of relief. Recovery in the euro area and in EU 28 is strengthening. Factors such as drop in oil prices, accommodative monetary policy, and global growth are helping the EU economy. But monetary policy alone will not solve structural problems of EU economies. Recovery from a deep crisis, as the one we had seen, requires decisive action from policymakers. Ministers today shared the view that Europe's recovery is still fragile, and what we need to do now is to reinforce the recovery. The strength of Europe's recovery will depend on our member states implementing a common growth strategy, which is based on three priorities: investment, structural reforms, and fiscal responsibility. Today's discussion focused on structural reforms. We outlined the positive impact that structural reforms can have on EU economies. Simulations conducted by European Commission staff show that if all countries conducted ambitious reform programs at national level, it would significantly increase GDP of the EU. According to our simulations, GDP would be more than 6 percentage points higher after 10 years relatively to non-reform scenario. What kind of reforms we are talking about? There are some common problematic areas in many EU member states. Labor markets need to be more dynamic and open to new technologies and working methods. In many countries, we need to address the problem of segmented labor market with strongly protected jobs for some and very weak protection for others, mainly newcomers to the labor market. This results in very high youth unemployment in several EU member states. Other examples of structural reforms at national level include improving the business environment, ensuring the long-term sustainability of social systems, taking into account aging population, and shifting the tax burden away from labor to other tax bases that are less detrimental to growth. Reforms help create businesses and jobs, and reforms help boost innovation and productivity. A business-friendly environment, well-functioning markets, and cutting red tape are best preconditions for investment to rebound. Reforms are already paying off in several countries. Those that followed reform paths, including my own country, Latvia, and other countries like Ireland, Portugal, or Spain, are now among the fastest-growing EU economies. The experience of member states shows that reforms mostly bear fruit in a longer term. However, they also have a positive immediate effect, which boosts confidence and creates investment-friendly climate. In May, the European Commission will present country-specific recommendations. Country reports, the Commission's analysis of member states' macroeconomic performance, were published already in February. This means that this year we had more time to engage with the member states, including social partners and other stakeholders, to discuss the main challenges identified in country reports. Our intention is to make sure that this year our recommendations are more focused in terms of policy areas covered. We look for a greater differentiation between countries when it comes to the key economic priorities. A special focus will be on removing bottlenecks for investment. Adapted to the national context, the structural reforms are essential for member states to secure sustainable growth and increase their adjustment capacity. Structural reforms are also a way of moving towards convergence of Europe's economies. This is the right moment to implement the reforms. It's important now not to lose the momentum. Thank you very much.
Thank you very much, Mr. Vice President of European Commission. And now I would like give the floor to Mr. Constâncio, please.
Thank you. Mr. Minister, Mr. Vice President of the Commission, the ECOFIN today, as it was already mentioned, was dedicated to two main subjects. First, an assessment of the economic and financial situation, and also about the structural reforms that are linked with the recovery of investment. We made the point that the recovery in Europe is affirming itself and it's broadening, and it seems now to be self-sustained. So we have dropped the qualification that the risks were to the downside. And indeed, this recovery is not only based on the contribution of the external sector, but it's also now based on progress in domestic demand. In the euro area, for instance, consumer durables have increased 4.5% compared with last year, and retail sales and car registrations have increased by 2.2%. And this is underpinned by finally positive growth in credit, which being still marginally negative year on year, nevertheless, the annualized rate of the last 3 months shows an increase in credit to non-financial firms by 2%. So the credit channel is starting to become positive, which is an indication that our policies are working, in the sense that both the increase in price of equities, the increase in price of bonds have created better financial conditions and a decrease in the cost of capital for firms, also for households, because for the first time in quite some time, the lending rates by banks have been decreasing, finally accompanying the decreasing in the borrowing costs for banks. So the only point which is still to be recover more, and it's still slightly below our expectations, is investment. And that links with the second major subject that we discussed this afternoon. What are the obstacles? What are the difficulties for the rebound of investment that is still, for the euro area in particular, 18% below what it was in 2007 before the crisis. And that's where structural reforms come as a very important driver for the increase in investment. Many aspects were discussed, from what has to do with the easiness of doing business in Europe, and disappointingly only 11 countries of the euro area are in the first 50 countries of the World Bank indicator regarding easiness of doing business. So it means that a lot has still to be done in that field, but also in the main focus of the projects that the Commission has launched. The idea of completing the single market in what regards energy, the digital economy and transportation, the Juncker plan for investment, and the capital union, the capital markets union are important structural reforms at the European level that will contribute to sustain the recovery and change the potential growth of Europe going forward. Thank you.
Thank you, Mr. Vice President. And now, dear media representatives, if you have question, please say your name and the name of the media company you represent before asking the question. Please, Peter, please.
Thank you. Peter Spiegel from the Financial Times. Question for the two vice presidents. Both of you gave your institution's economic forecast saying that things were turning around but still fragile. But neither of you mentioned this morning Greece. You talked about structural reforms being the main hindrance to further growth. Can both of you discuss how both the Commission and the ECB would view ongoing troubles with Greece and what risk it poses to this nascent recovery that we're seeing gaining speed now? Thank you.
Well, as regards situation in Greece, then it's probably worth looking a couple of months back. If you look at the end of the last year, Greece economy was back to the growth. Greece has had quite robust job creation rates. Greece was delivering in its fiscal targets, and Greece has ensured financial stability. And actually, we were discussing how, with the help of some kind of precautionary arrangement, Greece would come back to the financial markets financing. So it means that basically the fundamentals for Greek economy to recover are there. And now what really matters is the political will of the Greek government to do the necessary reforms to regain financial stability once again, and with this, Greece will be able to rebound economically quite strongly. So now it's really important to reach an agreement as regards Greece bailout program, regain financial stability, and with this, Greece will be able to return to the growth. Still, if we look at European Commission's winter economic forecast, in our winter economic forecast, we expect all 28 EU member states, including Greece, to have positive growth. Of course, this forecast has not taken into account latest developments during the last couple of months and increasing financial instability, but it shows that actually also Greece's economy is about to come back to the growth. What is now missing is really once again to regain the financial stability.
Thank you.
Yes, indeed, as Vice President just said, Greece undertook a lot of reforms. According to the OECD, there were 5 countries that were the ones that did more reforms in the past few years, and Greece is one of the 5. The others are Latvia, Estonia, Portugal, and Spain. So, indeed, there is a basis of adjustment which was done, but that must not be abandoned, and that is the crucial point, because several of these countries, and that also includes Greece, still face challenges that are significant in the case of Greece, in particular in what regards long-term debt sustainability, and that then requires measures that prepare the future for public finance that can be more robust and can face that challenge. And so we need an agreement to the conclusion of the review of the program that was in place, and all member states and all European institutions are working towards that goal, and I feel confident that in the end we will reach the goal of an agreement with Greece in order to pursue the recovery of growth and the sustainability of public finances in Greece.
Yeah, thank you. Please, next question, yes.
Jorge Valero, Europolitics. We've been told that during the discussion today in the Eurogroup, some member states or a member state proposed to the rest of the Eurozone ministers to start preparing a plan B in case the talks collapse and in light of the level of frustration. I would like to know, it's a question for Vice President Dombrovskis, I would like to know do you think that the institutions and the Eurogroup should start exploring this possibility? And a second question, if you can confirm that the Commission is not preparing at all whatsoever any contingency plan. Thank you.
Okay, as regards today's Eurogroup discussions, of course we know that those were very complicated discussions, and Eurozone finance ministers expressed concerns about limited progress in technical negotiations because initially it was foreseen that technical negotiations would go till the end of April. Now it's clear that it will take longer, but at the end of the day, the result of these discussions was that technical negotiations should continue. They should speed up. Also, there will be some look on the working methods of those technical negotiations to make them more effective. So it means that negotiations continue clearly with the aim to successfully complete existing bailout program and, as I was saying, to regain financial stability in Greece. So this is the clear decision of Eurogroup. So we are now concentrated on this plan and not on plans B or any other plans.
Thank you. Question in the first row.
Jeff Black from Bloomberg News. I have a question for Mr. Constâncio. Mr. Constâncio, you said a few moments ago that the qualification on the outlook for the economy, you've dropped the line that the risks are on the downside. Now, on April 15, as you know, Mr. Draghi said that the risks are still on the downside, but the outlook is more balanced. So, could you confirm that you have indeed changed the outlook since then, and what may have caused that? Thank you.
No, we have not changed. I was referring, of course, to the expression of more balanced, which is, of course, different with the recent past, but no more than that. Let's wait for the next round of projections from our staff. Also, the Commission will have their spring forecasts, and let's see what can be produced by those forecasts. The indicators that meanwhile have become available, mostly so-called soft data, go in a positive direction. So that justifies fully that we now talk about more balanced risks, and we hope that shortly we can perhaps talk in a different way and a more optimistic way. But let's wait for those rounds of projections.
Yeah, thank you. And one more question, please, in the middle.
Hi, Gabrielle Steinhauser from the Wall Street Journal. I'm just going to go back to my colleague's question earlier. During the discussion on growth, did any of the ministers express any concerns about the effect the current Greek crisis may have on growth? And are you yourself concerned? It's both for Mr. Constâncio and Mr. Dombrovskis. Thank you.
So as regards today's ECOFIN discussions on economic growth and structural reforms, and also today's Eurogroup discussions on Euro area report, primarily we were really discussing what are economic growth prospects and what needs to be done to actually improve those growth prospects, to strengthen the recovery, what structural reforms we need to do, what investment we need to do, how do we address different bottlenecks. So we were not, during those discussions, addressing the question of Greece or any other specific countries' impact on economic development, because as regards specifically Greece, there was a very extensive discussion in the morning in Eurogroup where different aspects of situation in Greece had been addressed.
Yes, I confirm that indeed no specific consideration of the Greek situation was present in this afternoon discussion, because everyone is working on the assumption that the situation will be sorted out, that there will be an agreement. And even if in that scenario the growth this year in Greece will decelerate as a result of the situation in the last few months, that by itself, of course, will not derail the recovery in Europe as a whole. Only other worst-case scenarios could create such concerns, but that's not the assumption on which we are working on.
Thank you. And the last question. Okay, it was the last question. I would like to thank you for your attention. Enjoy this evening in Riga and see you tomorrow. Thank you.
Yeah.